Did you know you can cash out millions of dollars from your life insurance policy while you're still alive? That's right, you don't have to die to benefit from life insurance. It's not just for your dependents, you can also benefit. I'm Kalila Reynolds, and it's time for another episode of Money Mondays JA, brought to you by Proven Wealth. Before we get started, don't forget to like this video, subscribe to this channel, and turn on those post notifications. Also subscribe to my newsletter at KalilaReynolds.com, and while you're at it, check out our other financial news on the website at KalilaReynolds.com/news. If you're a young adult, life insurance may not be at the front of your mind. You may be focused on establishing a career, managing student loans or other debt, or just trying to get your life started. Insurance is a form of risk management, mostly used to guard against the risk of a loss, such as your death. Who wants to think about that, right? But that's not its only purpose. Your responsibilities are increasing, and as your responsibilities increase, there's more to protect. So now is a great time for you to consider life insurance, and I'm here to explain why. Firstly, low rates. While there are several factors that determine the cost of life insurance, generally, young and healthy adults like us get the best rates. So there are scenarios where a 20-year-old could get rates at half that of someone in their 40s, assuming both don't smoke. Age can be a significant factor that influences your life insurance premium. What is a premium? It's the amount that you pay, usually in regular installments, for your insurance policy. The older you are, the more likely it is that you'll pay more for life insurance, since insurance rates are based on how risky it is to insure you. And I don't mean to sound macabre, but basically how likely you are to die young, and they'll have to make a big payout early. Policies paying out a death benefit usually grant a lower rate to younger, low-risk people like us. So consider buying insurance when you're in your 20s or 30s so that your premium will be lower, and with the right kind of policy, that premium will not go up as you get older. Secondly, life insurance will help to protect your family and your loved ones. So let's fast forward 5 years from now. You have a child or you're married and your responsibilities have now increased. You're suddenly thinking, how can I protect the financial stability of these people that I love? And if your loved ones depend on you for financial support, then life insurance will be especially beneficial, because if something happens to you, it will replace your income to continue to support your family. And this is really important if you have young children like I do. Hey Reese, hey Rai Rai. And thirdly, you can receive benefits while you're still alive. Yes, you heard me right. Life insurance is not just for when you're gone. It can also be an investment. Certain plans allow you to build cash value through your life insurance policy that accumulates over your lifetime. So what does this mean? Cash value life insurance policies provide lifelong coverage combined with an investment account. So a portion of your premiums are directed to the investment account. This is called the cash value, and this money grows with interest over time. If you decide to cash in your life insurance early and give up your coverage to the insurer, you will receive the policy's cash value minus fees. You can also access the cash value as a loan, use it to pay premiums, or make a partial withdrawal. Interesting, right? But wait, there's more. If you have a participating cash value life insurance, you can even receive dividends. Mutual insurance companies are insurance companies that are owned by their stakeholders. Therefore, if the insurer makes more money than they need to run the business, they pay some of it back to policy owners in the form of a dividend. This is a living benefit of life insurance, since you can use the money while you're alive. Depending on the type of life insurance you have, it can even cover unexpected medical issues. And since we're talking about types of life insurance, there are two types. You have term and whole life. Let's say that two clients of similar age and health get a policy with $100 million payout when they die. An agent told us that one could pay premiums of $40,000 while the other pays $400,000 a month. How can that be possible? Well, it's because one policy relates to term and the other to life. So what's the difference? Well, term insurance pays only if you die during the term of the policy, which is usually between 1 and 30 years. Most term policies have no other benefits, so that's why it's cheaper too. Now, whole life or permanent insurance, on the other hand, pays the death benefit whenever you die, even if you die after 100 years. Plus, it also allows an investment aspect to the insurance, so make sure you know which type you're buying. Some insurance companies locally even allow for persons to switch from term to whole life once the term has expired and the client renews within 30 days. And this switch avoids having to prove that you're healthy. So some clients will make the switch later in life to the more expensive whole life insurance since they've demonstrated their health within the term. Again, with whole life insurance, the benefit is guaranteed to remain in force for your lifetime once, of course, you pay your premiums on time. Term life insurance is like leasing a home, while home life insurance is like buying a home. Term insurance can cover you from 10 to 30 years, while whole life, as the name indicates, covers you for your whole life. Term insurance can protect your mortgage, income, or children's tuition, while whole can give you cash value, but it's more costly than term insurance. There are different types of whole life insurance plans that offer different benefits and are differently priced, and both term insurance and whole life can have varying plans. When you're just starting out, life insurance may not be your first concern, but putting it off may cost you, so find out what plans suit you best and invest in life insurance while you're young. Well, that's it for this episode of Money Mondays JA, brought to you by Proven Wealth. Follow them on social media at We Are Proven, and follow me on Instagram and Twitter at Kalila Ray. Now here's what's coming up on Taking Stock.
The year 2020 was, putting it gently, a lot. On the international scene, we saw the world come to a standstill with global lockdowns. Oil prices went negative for the first time ever. Millions of people lost their jobs. Racial tensions rose to fever pitch. And let's not forget, we saw Donald Trump lose the 2020 US elections. And of course, Jamaica wasn't spared. Many companies buckled, some closing permanently. The Jamaica Stock Exchange declined by more than 20%, making it one of the worst performing stock exchanges globally last year. Joining us to recap the JSE year that was 2020, we have the JSE's Managing Director, Marlene Street Forest. And later, the analysts weigh in on the latest market developments. They'll tell us their 2020 standouts, outlook for the year ahead, and their take on the Derrimon and Proven APOs out now. It's our year in review.
As always, thanks for watching. Here's a reminder to like this video, subscribe to this channel, and share with your friends. Also subscribe to our newsletter at KalilaReynolds.com for the latest business news, analysis, and the transcript of this episode. I'm Kalila Reynolds. Stay safe.